Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily Tesla report for Wednesday, June 12th, 2024. But before we check out the charts, I just want to ask you to please click like, share, subscribe, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos, just like the daily Tesla and daily NVIDIA reports, daily analysis in the SPY, daily analysis in the Triple Q, weekly analysis in the S&P 500 index, the NASDAQ 100 index, and Apple stock, as well as 2 individual stock picks a week that you never see on YouTube that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor, always looking for 20% moves or more on those underlying stocks. And you get to see all of this for free. We offer a 5-day free trial up front. So check out wickedstocks.com. Let's take a look at the charts. Start with the big picture. As always, work our way into the day itself. Long-term trend remains bearish, and that is to say the long-term being a one-year bear trend following that July high of last year. We've been in the sequence of lower lows and lower highs as defined in part by the 216.09 longer-term channel top. Rallies into this area should be considered sell opportunities for Tesla as we can continue south even to new lows, breaking the April low perhaps over the next month or two. I'll get to that in a moment. Ultimately, and I don't want to use the word ultimately, but when I use it in this context, it's like over the next several months. We can see 101.81 with the sell signal, and I'll just jump to that right now, with a sell signal below the 152.86 channel bottom. Now, whether we test the 152.86 channel bottom anytime soon or not, and by that I mean over the next 3 to 5 days, would come with a settlement today below 166.37. 166.37 is a channel bottom that did contain Tuesday's lows. And from here, we can rally back over the next few days, 3 to 5 at the most, to this band of channel resistance at 177.69 that's performed well over the last week or so in containing buying pressure. So this has been anticipated. The holding below 177.69, we've mentioned how 166.37 should be considered a 2 to 3 to 5 day target. We've met that objective, and now the market can, I'm not expecting it to, but it can. You should give it the room to rally back to the 177.69 formation. In fact, so much so that if you went long on Tuesday following the testing of the 166.37 area, you can hold out for 177.69 now over the next 1 to 3 days, I think is realistic. On the way up, we do have this 173.42 trend line, simple red trend line across these lows that may well contain intraday buying pressures. If we push through 173.42, 177.69 is likely. But that is kind of the day trade setup, selling perhaps 173.42 in anticipation of a retest of 166.37. And if we push through 177.32, 177.69 in reach today, 177.69 able to contain daily buying pressures. And once tested, we can round back up to 166.37 or fall back to 166.37 within several days. And this is really kind of our 3 to 5 day swing trade, 166.37 to buy, 177.69 to sell. If we close today below 166.37, we are then anticipating, and this could be quick, this could be within 1 to 2 days, or this could take through next week, depending on volatility, of course. But a settlement today below 166.37 would set up 152.86 as a 3 to 5 day objective where we can bottom out on a weekly basis, where profits can be taken. If you sold the market short with a settlement below 166.37, you can take profits at 152.80 and perhaps even go long back to channel resistance, which will be roughly this band of resistance at 177.69 because they are parallel with each other roughly. So once we test 152.86, you can not only take profits on a short position, but you could, if you like, reverse. I would have no buy signal per se, but this is an area of support, 152.86, that just may contain selling through the rest of June, because over the following couple of weeks, we can make our way back to 177.69. Now, if over the next week or two we settle below 152.86, that is your go with sell signal, given the fact that the longer term dynamic still remains heavy below 216.09. And I mentioned how the low 100 area should not be discounted as a possible objective or a possible reachable price point over the months ahead, the next 3 to 5 months ahead, it would be a settlement over the next week or two below the 152.86 formation that would set that up as a clear objective. And I would expect the market to continue south. You can see the simple trend line alone is in the 110s already and dropping. And there is a descending channel bottom. If you were to draw a trend line off that December high against this recent high from just a few days ago and projected across these intermediate lows, we haven't drawn that out yet, but that would probably already be close to that 101.86 low from January of 23. So I'll say it one more time that if we close below 152.86, we would then clearly anticipate this 101.81 area within several months. Let's just call it 1 to 2 months, depending on volatility. Yes, we have a trend line at 142.11, and we'll be pointing that out as a level that may well contain daily selling pressures, but really I see no good reason to be long Tesla through July and even through August if we were to close below 152.86. Until then, we can round back up from here into the upper 170s. Let's talk about 177.69. It is first and foremost in reach today if we push or open above 173.42. And if we happen to close above 177.69, then we are expecting 187.24 within 3 to 5 days. So the 3 to 5 day dynamic, I'll just outline again, is your ceiling is 177.69, your floor is 166.37. If we close below 166.37, the next 3 to 5 day time frame shifts bearish to 152.86. And inversely, if we close above 177.69, the 3 to 5 day time frame shifts positive to 187.24, where, as I've been saying, this longer term channel top may well contain buying not only through June, but even through July. And from here, we can fall away again. If we were to close above 187.24, then over the following 3 to 5 weeks, I would expect a test of that long-term resistance I've already mentioned on the daily chart. It's at 255.51 to the weekly chart 216.09. This upper area in the mid 210s right now expected within 3 to 5 weeks of closing above 187.24. Until then, consider this your midterm resistance. 187.24 having the ability to contain buying perhaps through July, and from here we can fall away again into the lower 150s within 3 to 5 weeks, and even lower perhaps as we continue into later Q3. In terms of the 3 to 5 day time frame, a 2 to 3 week time frame, the only interest I have in buying Tesla is if we either A, settle above 187.24, and you could make a case for 152.86 as a bottom picking opportunity, but be careful. The trend is bearish longer term. That doesn't mean that the stock's going to fall apart and it's destined for 101.81. The only way I see, though, Tesla showing a kind of a bull market through the rest of the year would be a settlement above this 216.09 channel top. And then I think within 3 to 5 months of that, we could push into the 320s, 330s, which I'll be showing if we were to approach 216.09. But once again, I don't expect to approach 216.09 unless we close above 187.24. And I don't expect to see 187.24 unless we close above 177.69. It's about as simple as that. Please click like, share, subscribe. Check out wickedstocks.com. We offer 2 stock picks a week. And also daily triple Q and SPY analysis. We also do weekly Apple analysis. Big signal in Apple, as you might not be surprised about all that. So I'll let you check that out. I think I'm going to throw that one of the Apple charts in the NVIDIA video for today. So you might check out NVIDIA if you're watching. That is all I have for Wednesday's Tesla report. I'll be back, of course, tomorrow with Thursdays, and you have a great day.